Hello and welcome to BFSI.com by the Economic Times. My name is Amol Dete and I'm in conversation with Nilesh Shah, the MD and CFO of Kotak Mahindra Asset Management Company. So to begin with, how do you see the BFSI sector? Because we have seen now insurance companies are also getting listed. The FDI has been there for 100%. The banks are now somehow accepted the fact that their margins perhaps will not grow more than 3% and they're going through heavy compliance. Why I'm asking this is because ultimately BFSI and specifically banks are going to finance, the large corporates and the India Inc. So how do you see the banks and the whole BFSI going ahead?
So you have banks, insurance, asset management, NBFC,
Yes.
and then other financial services. Thumb rule, to create growth, you have to create credit which is little bit ahead of growth. So clearly banking and financial services sector will have to grow if economy has to grow. Second, the financialization of savings is happening. Earlier bulk of the savings moved into currency, physical products like real estate and gold. It wasn't necessarily going into financial sector.
Right.
Now clearly those things are changing. Third, our financial infrastructure is better than most parts of the world. Our exchanges handles volumes is like just Kumbh Mela. No other country is handling that kind of volume.
Yes.
The complexity which our financial infrastructure handles in terms of languages, in terms of locations, in terms of customer preferences is totally unique. So we have infrastructure, financialization of savings is coming into play, and BFSI has to grow in order to pull GDP growth. Put together, we remain bullish BFSI.
But specifically if I ask you about the private banks and the PSU banks, because we are seeing a lot of operational cost of the private banks is going into the IT sector, and PSU banks are also facing a lot of challenge with IT now. In fact, everyone complains that a lot of money is going to the IT. And on the other side, talent is a problem, attrition is a problem. Obviously, they are talking a lot about fees, income and everything. But any particular or specific view on the bank, sir?
So banking is a business where to earn 2 rupees, you have to put 98 rupees to risk. Clearly, the rule of winning is very simple. You have to lend in a manner where return of principle is more important than return on principle. The credit culture should be good. And your liability franchise should be good, that you are able to raise cheaper resources. If you borrow at higher price and lend in a risky investment, you're not going to survive for long. So clearly those banks who have liability franchise, they will do well, and those who have good credit culture, they will do well.
The interesting trend that I see is alternate investments. In fact, Kotak has also been talking about it. Private credit. These 2-3 things are quite picking up. Do you see that private credit, alternate investments will have a better future in India?
Undoubtedly. Today when entrepreneurs need capital to invest, they have lot of options on the equity side.
Yes.
Venture capital, private equity, public market, angel network, mezzanine, and so on and so forth. If they want to borrow money on debt side, again there are lots of options.
Yes.
Where are the options on the hybrid side? Where he wants to pledge his shares and wants loan against it.
Right.
Or he wants to borrow money on his own name. Unlikely that he will have many choices. He'll be a taker in that negotiation, not a setter in that negotiation. And performing credit market, private credit market fills that gap. So undoubtedly, private credit, performing credit, alternate, whichever name you call, has a great future, as it allows entrepreneurs of India to raise mezzanine financing or hybrid capital.
Will it be a different engine, and do you see any impact maybe on banks? Because at times even banks try to be very competitive to lend to the corporates or particular sectors. as you said, equity and debt, we have our pillars ready, our engines ready. But do you think that the banks will become very competitive as soon as this segment picks up?
Private credit market exists only because banks are forbidden to lend to such kind of lending.
Yes.
The day banks are free to invest over there or lend over there, private credit market will end. So today there is a regulatory arbitrage between banks which cannot finance acquisition, which cannot finance loan against shares beyond certain amounts, and which is why there is a need for alternate market. Now, regulator is wise in ensuring that banks don't get overexposed to it. They have put these restrictions based on past experience and global experience. So, I really don't know how this regulatory arbitrage will come to an end.
Exactly.
And as long as banks are forbidden to lend into private credit, performing credit market, it will be supported by the alternate credit.
What are the major themes now that you see specifically if we look at market? Where will market grow? Again, I mean, I know it's not a typical astrology question, but your outlook, because most of the times your outlook is quite correct. Considering we are already crossing 80,000, sir, rupee is slightly, what I can say, more at a comfortable level than we were expecting. It will reach 90 and everything. And more importantly, again, the positivity is very huge still on India, even after the war and all those issues. And more importantly, Apple has added a different flavor to what we are doing. So what are the themes, outlook that you see specifically now?
So always it is entrepreneur which makes the difference. The one theme which will do very well over next couple of years is consumption. I think thanks to income tax cuts, EMI burden coming down, potential petrol diesel price cuts and 8th pay commission, consumption should get supported. The second theme which we believe will do well is defense. Now a lot of good news are already factored into the prices. But the demonstration of Indian equipment manufacturers outperforming Chinese, American and Turkey equipments is something which world will remember. Their market has expanded from India to rest of the world as well. From being an importer of defense equipments, India has a great opportunity to become exporter of defense equipments. So defense is one sector, one segment which will do well. But please remember, as of today, it has discounted lots of good news. So right time to enter will be on correction rather than before.
Okay. One specific question that I have is on the China plus, model. Interestingly, when the economic survey came, the CA had said something very, very interesting. And that is the government should look at Chinese FDI very seriously. They should have bond with China. Unfortunately, we didn't see it translating in budget or nobody spoke about it. But even after the tariff, war between whatever the America and China is happening, there are various reports which says now that, India should look at China quite positively. I do not know what would be the situation now after the Pakistan issue. But one, what is your clear view in terms of the business between India and China? And second, should India look at China as a competition or as a partner, as a business partner or a neighbor? How do you think India should look at?
So the business with China is loaded in their favor. More than $100 billion plus trade deficit is unsustainable. Number two, clearly there is distrust between India and China, especially after what happened at the border. When you refuse to give visa to Arunachal residents other than on a loose piece of paper, it doesn't bode confidence. We have sent Dr. Kotnis to China and demonstrated to Chinese, albeit long back, how we respect them. We now need a Chinese Dr. Kotnis to come to India and demonstrate to us that yes, China also respects India and we can have a win-win relationship. The best part is that for thousands of years, India and China had that relationship. Their Faiyan, Yuan Sang came to India. They learned Buddhism from us. Their Shaolin is nothing but gift from India. So for thousands of years, both civilization coexisted peacefully with each other. It's just last 7-8 decades where we have been not able to trust each other. I'm sure a Chinese Dr. Kutnis will be able to bridge the gap.
Well, certainly, let's hope that. In fact, I read that book of Amartya Sen about India, where he said that even Mandarin word came from Matra, which is our word in Sanskrit, and lot of words of Chinese are still, translated from Sanskrit itself. Thank you for adding that. On the investment side, sir, I have two questions. One is specifically how the investment market has changed, and second is on the wealth. But on the investments, earlier it used to be only bank or maybe one or two, investors here and there. But now just not private equity or banks, but like we said, private credit, alternate funds, then the VCs, then the angel investors, and so many investors are coming up. More importantly, the family offices. And a lot of them claim that they have a dry powder, enough dry powder. What is your observation? Do they really have that much of dry powder? That is one. And second, where do you think they are actually deploying the funds? Are they betting on really these new entrepreneurs whom you think are part of the Triveni Sangam, or they are just looking at, okay, 1 saal, 2 saal, I have to move on, I have to get this much. What is happening there?
So in a large country like India, all kind of opportunities are available for people to capture. Undoubtedly, our experience of investing is very, very positive. Over last 10 years, 20 years, 30 years, the only market which have rewarded emerging market investors is India. For 17 years, Chinese stock market hasn't rewarded investors. In Russia, investors have lost everything. Brazil, South Africa are also trading way behind their previous high.
Right.
So India is the only market which has rewarded its investors. And hence, and more importantly, being a domestic driven economy, it provides opportunity across the spectrum.
Right.
You want to be a venture capitalist, there is opportunity. You want to be late stage investor, there is opportunity. You want to be in alternate space, there is opportunity. You want to be in private market, there is opportunity.
Right.
You want to be in public market, there is opportunity. Yes. More importantly, we are the only person who is willing to give red carpet. There is no other country in the world where largest FMCG company, largest automobile company, largest private sector bank, largest telecom company is majority owned by foreigners.
Right.
We allow that. We have no problem if investors comes and take majority stake in such critical sector. So there is opportunity and there is red carpet. What more investors will require?
Yes. On the wealth creation side, sir, I mean, we have obviously seen lots of people have made good money in India, and specifically in last 10 years, we have seen huge change. Nobody expected Sensex will, achieve 30,000, more in just, 10 years. Where do you think India will make more money going ahead? Where the wealth creation will happen? Nobody expected 15-16 crore people will start investing in SIP. Nobody invested, nobody thought about it, but that happened, and everyone today talking about SIP, right? So where this wealth creation will go and how Indians will make more money?
See, one is the highest wealth creation. That's always going to happen in backing entrepreneur. You get right entrepreneur, you invest in him or her, that will always going to give you the best return. The earlier you take the bet, riskiest it might be, but it can also be high reward because risk and return goes together. What is important is sustainable wealth creation. That sustainable wealth creation where risk is optimized for the return generated will come through asset allocation. As an investor, you'll have to divide yourself across private equity, venture capital, listed, unlisted equities, debt, gold, real estate, global assets, and so on and so forth. So you will have to invest through asset allocation to create sustainable wealth. But to make maximum wealth, you have to invest with the entrepreneur.
Okay. But a lot of entrepreneurs have lost, in last maybe couple of years, a lot of people betted very high on couple of entrepreneurs, new startup companies, but it didn't go well. Any precautionary aspect that you would like to tell?
So that's why I said sustainable wealth creation is different from maximum wealth creation. But if you are going for backing entrepreneur, go diversified way.
Right.
Have lots of monkeys. Some of them will grow to gorilla, feed them more. One of them will become King Kong. That's good enough to cover for all other monkeys.
Right. One more thought specifically on the gold. In fact, I really loved your comment in that report where you said central bankers have become housewives, and that's where I thought, okay, this is perhaps about gold. Central bankers all over the world are buying gold like there is no tomorrow, right? Do you think it will continue the same and gold will, continue to glitter?
So our opinion remains that gold will glitter. The breakdown in financial system globally, where Russia's foreign exchange reserves were seized because they invaded Ukraine. There was freeze on Colombian assets because they refused to take immigrants. Now, all these things are raising legitimate doubt in the minds of global central bankers.
Right.
When we need, whether we will get the money or not. I mean, could India had refused US on a ceasefire with Pakistan, would they have gone and seized our reserves? Now, those are the questions which will be there in the minds of every central banker, and hence what will they buy?
Right.
They are likely to go and buy assets which they can hold and which are internationally tradable. Clearly, gold and silver are two assets.
Absolutely.
Now, silver not many central banks have bought, so by default it remains gold. So I believe gold on back of central bank buying should get supported. Of course, it is a dream run since COVID bottom. So the expected returns may come down, but undoubtedly central banks will continue to add gold, and that will keep gold prices supported.
Certainly, sir. I think I have done with my questions. Just before I let you go, one last, thought maybe. In fact, it's great to see the positivity and optimism for India, no doubt about it. I still remember when I started covering finance journalism and market, and I used to go to meet experts when the market was down, and I used to ask them basic question, why the market is down, and the answer was, oh, FII bech diya.
Yeah.
Today we are seeing the opposite. FII beche hame koi farak nahi padta because DI has almost doubled. So with this enough positivity, my simple question to you is, what can go wrong? Is there anything that can go wrong?
So we can't afford to score a self-goal. And the classical contradiction is between Sanand and Singur. Tata's India's most respected business house wanted to set up an automobile factory in Singur. People came out in protest of it. They took years to convince them. Nothing happened.
Right.
And finally they moved out. Today if you go to Singur, the growth is not visible. Then they were searching for alternate. They got SMS, welcome, suswagatam. They went to Sanand, got the land, got the power connection, got the approvals. In 18 months, Tata Nano started coming out. Nano was not a success, but the same factory today makes other automobiles.
Absolutely.
In fact, Sanand has become hub for for automobile exports with Maruti and other company coming in. We have to create many more Sanands and no Singur. That's the only mistake we can't afford to make.
On that note, thank you so much for sharing those meaningful thoughts. That was really meaningful. Thank you so much for being part of ETBFSI conversation. And thank you so much for watching etbfsi.com. Stay tuned, stay connected to ETBFSI.